Alright guys, it's time for another week ahead video. Now this week our focus will turn to the euro because we have the ECB coming up on Thursday and will be an interesting meeting from them. And then on Friday we have Q3 GDP data as well as flash October CPI data coming out on Friday as well. Now recently things have taken a little bit of a turn for the worse when it comes to growth and economic activity in the eurozone. This chart over here is just staggering numbers really. It's a recent Bloomberg article reporting on a survey done by McKinsey & Co. in August that highlighted that over half of Europe's small and medium-sized or SME businesses say that they face bankruptcy within the next 12 months if their revenue doesn't pick up. And 1 in 5 companies in both Italy and France actually anticipating filing for insolvency within just 6 months. Now, these are really scary numbers. And this survey was very significant as well because it covered 2,200 SMEs throughout Europe, which accounts for more than 60% of the total workforce, as well as about 50% of total economic value. So a really bleak picture being painted by this survey. And one of the big threats right now for the European economy is, of course, that massive resurgence that we've seen in the virus, basically forcing more restrictive measures being put in place. And that has already started to take its toll on the activity data, which is now risking moving back into that contraction territory here in Q4. Now, it's not only the restrictions, of course, that's hampering growth, but also from a consumer point of view, the associated fears with the virus is really keeping consumers indoors and very reluctant to spend. So with the hopes of that fast and broad economic recovery basically fading into the background, the expectations and pressure are growing on the ECB to do a lot more from their side to try and aid the economic recovery. Now, until now, they've only spent about 500 billion of their 1.35 trillion pandemic emergency purchase program, and the pressure is now firmly on them to do even more than that. So coming to the week ahead, as we said, focus will be on Thursday's ECB meeting, and then on Friday we have GDP data for Q3 and flash CPI data for October on Friday. Now, the Q3 GDP number is going to be one for the record books once again. Expectations right now is ranging from consensus of 9.5 or 9.5% with a minimum and maximum of 5.2 and 11.5. Now, obviously, very big numbers here, and we might see a little bit of a knee-jerk reaction coming out of that data point. But this data point is very old news really by now. A big and overstated rebound was expected just from the purely base effect that we had from that very low numbers in the Q2 data points. And apart from that, the focus right now for growth in the Eurozone is firmly set on Q4, with the data we've seen in terms of activity data not really painting a very pretty picture going into that final quarter of the year. So the bigger focus in terms of the data will probably fall on the flash CPI data as opposed to the growth data. Now, rising risks of deflation in the Eurozone has been one of the key reasons why we've seen a couple of ECB members coming out being very concerned about the Euro's recent strength. Now, the market's expectations is quite telling on the downside here for CPI, with consensus expecting another negative print of negative 0.3%, but minimum and maximum both showing a negative number at negative 0.5% minimum and negative 0.1% for the maximum. Now, another negative print here is already expected and probably also thus baked into the price, but depending on the outcome of that ECB meeting that we have on Thursday, we might see a bigger reaction from a bigger than expected miss or maybe even a beat in that data. Right now, markets, as we said, are expecting further easing from the ECB, with majority of market participants expecting another 500 billion increase to that PEP program in December. And the reason why no announcements are expected at the October meeting or changes from that policy is because they think the bank will probably want to wait for the updated economic staff projections, which only comes out at that December meeting. So with no changes in policy expected at this meeting, why then pay attention at all? Well, even though these additional increases of the size and the PEP and the length of the PEP is only expected in December, this will be the perfect meeting for the ECB as well as ECB President Lagarde to basically signal that more easing is on the way. So remember that it's not only inflation right now that should be worrisome for the ECB, but also the size and the pace of the virus that we've seen. It's really caught them off guard, with Lagarde recently saying it's come earlier, and from that point of view, that has surprised and it's not a good omen. So the bank, important thing to keep in mind is that they haven't really used up even half of the current emergency purchase program, which also means that they might have some time to be a little bit more patient this week. And they might just rehash the prior meeting's view that they stand ready to adjust their policy tools where and when they deem it necessary. Now, with the euro positioning still elevated, with the drop in economic activity, with the recent virus resurgence, the possible delay of the recovery fund, and that jolt higher in the euro that we've seen over the past week, there is more reasons to announce changes now, or at least hint to those changes now. But the bank has failed in their past communications this year at their meetings, and any obvious reluctance from their side to signal further easing is on its way could see the euro surge even higher. So looking then at some possible sentiment shifts and a trade plan for the week ahead, scenario one would be a clear signal or hint that more easing is coming in December. So markets already expecting that to happen, that PEP to be increase in both the size and the length in December. So watch out on Thursday for any solid confirmation or signal or hint from the ECB that is going to happen, alongside a very strong dovish tone. Apart from that, a softer CPI print below the market's minimum expectation on Friday could also add as an additional weight to the downside on the euro, especially if the ECB does signal a change is coming the day before. Now, trade plan for this, we would expect this scenario to see the euro weaken across the board, and really the best currency to exploit that weakness against will depend on that particular day's sentiment in the market. So do make sure to tune into the terminal for our daily updates on Thursday as well as Friday. Scenario two is just the same old reluctance like the prior meetings to signal any changes. Now, with expectations for that further easing coming into December, watch out for any obvious reluctance from the ECB, both in that statement and the press conference, to signal an expected change. Coming across too complacent at this meeting could see the euro jump and also cast doubts on the bank's resolve within the governing council to really do whatever it takes to assure that economic support is there. A complacent ECB alongside a surprise beat in the inflation data could just be that perfect cocktail for a further gain in the euro in the week ahead. But equally important, if we do see a very big surprise miss in ECB, even if the bank is complacent to show further easing is coming, that can also weigh on that expectation for the bank to do more, and that can actually weigh on the euro. So do pay attention to that data on Friday. Now, in this trade plan, we would expect the scenario to see the euro strengthen across the board. And once again, given the current state of affairs with the US election in the wings, there's lots of uncertainty in the market. So really the best currency to choose to trade against the euro on the day would be in line with that current sentiment. So once again, make sure to tune into our daily reports and videos for more info on that.